With mortgage rates rising so much over the past few months, your pre-approval letter might be full of holes. In this video, I'm going to tell you how this might affect you, while sharing some tips on how you can navigate this rising interest rate environment. Pre-approval or pre-qualification letters in general, these are full of holes already. In this market, what I'm actually recommending people to do is essentially to upgrade from a pre-approval or a pre-qualification into something more solid from the lender. It could be called a pre-commitment, a loan commitment letter, some sort of full approval. I think it's really going to be beneficial for you to partner with the loan officer, choose somebody that's offering good rates, good fees, and also good service. Submit your full application, all your supporting materials, and get this extra level of assurance that you're not going to have the rug pulled out. Every one of these letters has a sales price and a loan amount on it. But even in the case of a more beefy document like a loan commitment letter, there's one fundamental fact. When rates go up, the biggest problem with these letters focusing so much on a set number is the fact that your debt to income ratio is going to be affected as the cost of financing goes up. Your pre-approval for say $300,000 from 3 months ago, it probably isn't $300,000 anymore. Now, if you are buying well below your maximum approved range, this may not be an actual issue for you in terms of still having your loan approved. But there are so many folks out there that have been pushing and pushing to higher and higher prices to keep up with all of the crazy competition. A lot of these folks are truly at their approvable ceiling already. And as the rates go up, that has the potential to cause some serious problems. To illustrate, let me share just one quick set of numbers. If you got pre-approved based on a loan amount of say $300,000, and let's say the rate you got at the time was 3%, well, that would give you a principal and interest payment of $1,265 on a 30-year fixed rate loan. If your rate comes out to 5% today, which is in line with the latest average rates across the market here toward the beginning of April, that payment's going to jump to $1,610. Therefore, if the payment at 3% already had you at the top end of your approvable debt to income ratio range, that extra $345 could put you right over the limit for approval. Instead of being pre-approved for say a $300,000 loan, your new max may look more like $235. So what I strongly recommend is instead of focusing on a sales price number, what you've got to get from your loan officer is the maximum approved monthly payment, including taxes, homeowners insurance, HOA fees, etc. Now, if your loan officer is me, which would be a wise move in these trying times, I'm going to hook you up with a spreadsheet tool. It's going to show the current interest rate for your scenario, along with that approved upper limit for the monthly payment. Now, you can use this sheet to run calculations for any property you come across. And this is important because it's not the case that every $300,000 property is going to get you the same payment due to the variability of, say, property taxes. But by using this tool, you can ensure that any offer you make, that you're not going to be above that red line. And I can check in with you as often as you like to update you as these rates move. If he goes up that tree, I'm really going to need you to hit the like button. You know, I think that my industry really needs to be ringing the alarm bell on this. And we need to give our clients the straight story that as rates go up, their pre-approved amounts are going to go down. One more tip. If you find yourself in this position where your purchase power has been negatively impacted, one way to get back on track would be to eliminate or reduce monthly payments that show on the credit report. I would be glad to review your case and we can see how to maximize your options. If you would like to get a pre-approval from me, you want to see what I can do for you on your mortgage, I think you'll be really happy with the numbers and the level of service that I provide. And to give you just a little window into how I approach the pre-approval process, check out this video right here. I hope to talk to you again soon.